Welcome to Dinar Trend Tracker. Warning, Iraqi Dinar holders, your assets could be irrevocably altered by a Treasury update coming this week. Dire repercussions may ensue if you are unprepared. Online speculation has reached a fever pitch, and investors around the nation are keeping a careful eye on the situation. Here, we'll give you the lowdown on all the knowledge you need to keep one step ahead and make smart choices. Halt before you put any advice you've seen on YouTube comments or forums into action. False information is circulating rapidly and might have far-reaching consequences for your business. This update could affect your strategy regardless of whether you're an experienced investor or just starting to think about investing. It is crucial to be abreast of developments involving the IRS, the Treasury, and regulations pertaining to foreign currency. We will discuss the possible effects on your taxes, investments, and financial stability of these changes. Stay with us until the end of the film, and you will learn how to navigate these changes with ease. Attention is crucial since this is not a routine update, but rather a pivotal moment that may determine the fate of your dinar assets. Let's get down to brass tacks first. An important requirement that U.S. citizens owning Iraqi drachma must be aware of is that the U.S. government taxes all earnings from investments in foreign currency. Do not skip this step. Gains from investments, such as stocks, real estate, etc., are subject to the same tax treatment as gains from foreign currency. It is a common misconception among investors that taxes do not apply only because the currency is foreign or the transaction takes place in a foreign country. This is not true. Actually, a capital gain occurs when the selling price of dinar is greater than its buying price. Any gain in value, whether temporary or permanent, is liable to income tax in the United States, and there are severe consequences, up to and including criminal prosecution, for those who do not disclose their gains. Ignoring reporting requirements is problematic since the IRS has systems to monitor currency exchanges, bank deposits, and major transactions, no matter how tiny they look. Let's take a closer look at the items you must disclose, the formula for determining your gains, and the lawful methods for reducing your tax liability. Tax avoidance and evasion are two very different things, and you must know the difference. Hiding money from the Internal Revenue Service, not reporting profits, or providing misleading information is all forms of tax evasion. The maximum penalty for this offense is 5 years in federal prison and/or a fine of $250,000. Contrarily, reducing your taxable income through tax avoidance is a completely legal process that requires careful financial preparation. Tax evasion strategies can significantly reduce the amount that dinar holders pay without exposing them to criminal or penalty charges. Timely sales to coincide with advantageous tax brackets, offsetting gains with losses from other investments, or holding dinar for more than a year to qualify for long-term capital gains rates are all legitimate strategies. When seeking guidance online, it is crucial to distinguish between reality and fantasy. The key to safeguarding your financial future is remaining informed and collaborating with competent experts, as a single misstep can transform a valid investment into a legal quagmire. Due to the fact that the upcoming Treasury update may affect reporting requirements, currency rates, or the timing of specific transactions, investors are on edge. Although the specifics are still under wraps, tax professionals are speculating that this may affect both the computation of short and long-term capital gains. Because it might dictate the optimal time to purchase or sell dinar, the timing of this news is crucial. Currency investments are vulnerable to market volatility and policy decisions, as this serves as a reminder. Investors often overlook the fact that the United States government keeps a careful eye on people's foreign currency holdings, particularly those who may have hefty tax obligations. By changing the way brokers and banks conduct foreign currency exchanges, update could indirectly affect your financial plan, even if it doesn't modify taxes regulations directly. Anyone in possession of Iraqi dinar would be well to pay close attention to current events and learn the ins and outs of Treasury updates. In light of this, what are your legal tax responsibilities? Any gain from the Iraqi dinar must be reported to the IRS together with any other worldwide income. Your capital gain while selling dinar is the amount you make more than what you spent on it. Ordinary income rates, which, for high incomes, can reach 37%, apply to short-term gains. Holding currency for more than a year results in far reduced tax rates anywhere from 0% to 15% depending on your income on long-term gains. For this reason, knowing when sales occur is crucial. Hundreds of thousands, if not thousands, of dollars can be saved by strategic planning. However, there will be serious repercussions if you disregard these regulations. A lot of people who own dinar have been tricked into thinking that their gains from foreign money are taxed, but that's not the case. It is imperative that you examine your records thoroughly to guarantee compliance if you have been depending on such inaccurate information. To remain in compliance with the IRS, record keeping is a crucial step. Every time you buy or sell dinar, be sure to document it thoroughly. The purchase date, amount, exchange rate, and total cost in US dollars should be recorded. Include the sales date, amount, exchange rate, and total earnings in your records. You are required to report your capital gain or loss on IRS Form 8949 and Schedule D, which is the difference. You can also be required to submit Form 8938 if the value of your foreign financial holdings above specific limits. The reporting level for US-based single taxpayers is $50,000 at the end of the year or $75,000 throughout the year. Precise documentation is crucial because the annual penalty for non-compliance with this form can reach $12,000. Use your memory and screenshots as backups. If you want to be ready for an audit, keep documents that are well organized, thorough, and can be proven. False information poses serious risks. A great many comments on YouTube and other online forums state that dinar profits are either exempt from taxes or that you may have specific dealers take care of your taxes. These claims could cause harm and are not accurate. Serious legal ramifications, such as a federal inquiry and criminal charges, may ensue from believing them. In addition to sharing data with financial institutions and currency dealers, the IRS has access to advanced tracking technologies. Investigations are triggered by large deposits or strange trends, and if flagged, you could face substantial penalties, interest, and back taxes. For instance, investors have spent over $1.2 million on penalties, legal fees, and interest due to the failure to disclose gains in foreign currency, even if the amount was just a few hundred. Preventing these outcomes calls for precise reporting, expert advice, and a methodical approach to compliance. Here are some instances from the actual world. An individual from California pretended to generate $2.1 million in profit from foreign cash in one instance. He was mistaken in thinking that doing business overseas would shield him from the investigation by the Internal Revenue Service. What was the outcome? Served 18 months in federal jail and was fined thousands of dollars. Another Texan investor tried to avoid reporting $800,000 in gains, which led to gains exceeding $200,000. For any dinar holder who believes minor regulations or exceptions may be disregarded, these incidents serve as cautionary stories. The lesson here is crystal clear: the IRS keeps a careful eye on foreign currency, and trying to hide income nearly always ends in failure. The only surefire ways to succeed are to follow all regulations, keep detailed records, and make well-informed decisions. This is particularly relevant in light of the fact that the Treasury may soon provide updates that could increase the level of scrutiny directed at significant holders of currency. Alright, let's talk about legitimate tax techniques. One method is reaping the benefits of tax losses. To balance out your gains from dinar, you can sell other investments that are losing money. Losses can be deducted from ordinary income up to $3 per year, and any excess can be carried forward. In years when income is predicted to be lower, timing sales to correspond with those years is another method. You can avoid paying taxes on a larger sum if you spread out your big purchases over several years. To alleviate the financial strain of paying taxes on big estates, installment sale treatment may be a possibility. Not only are these tactics completely lawful, but tax experts actually recommend them to their clients as a way to reduce their tax obligations without sacrificing compliance. It is crucial to seek advice from experts. Investors in dinar can benefit from the guidance of a certified public accountant, CPA, or qualified tax attorney, TA, who focuses on international taxation. When compared to the costs of making a mistake, the cost of professional counsel is typically far lower. In order to optimize legal tax savings, they can assist with structuring sales, scheduling, and reporting. If they don't get advice, even well-meaning investors run the danger of unintentionally avoiding paying taxes. This is of utmost importance when dealing with value holdings, as even the smallest mistakes can lead to substantial losses. Keep in mind that getting things right isn't the only goal. Protecting your financial future requires exhausting all legal options. Seeking professional assistance can also assist with possible voluntary disclosure programs, which can help reduce fines compared to being caught by the IRS, in the event that you have unreported income. Remember that U.S. citizens who live overseas are still required to pay taxes on all of their income, regardless of where it is earned, even if they hold dinar abroad. Unlike investment profits, wages and self-employment income are not subject to the overseas earned income exclusion. You may still be liable for taxes in your home country even if you're now residing abroad. Although tax treaties may lessen the impact of double taxation, it is still conceivable. It is vital to understand these guidelines and to consult a specialist. Being abroad does not exempt you from reporting requirements, and being ignorant of this fact is not an excuse. There is a paper trail that the IRS employs to track earnings, thanks to the requirement that currency dealers and banks disclose major transactions. The Internal Revenue Service will nonetheless consider a trade of dinar for another currency to be a taxable event, even if you opt not to convert to US dollars. A common misconception among investors is that transactions involving minor sums or currencies are not subject to fees. These misconceptions are common but not true. No matter the amount or currency, all gains must be recorded. If you want to keep your assets safe and stay out of trouble with the federal government, compliance is a must. Added urgency with the impending Treasury announcement. Exchange rates and investor actions could be impacted by market reactions. Any change, no matter how little, could have an impact on tax strategies, capital gains, and long-term planning. Before any planned sales, investors should study records, consult experts, and think about timing methods. You can legally take advantage of advantageous tax rates and avoid expensive blunders if you act early. You risk jeopardizing your financial future if you choose to ignore these trends. Those who have not yet disclosed gains from foreign currency may find a safety net through voluntary disclosure programs. When compared to fines levied following discovery, these programs drastically cut penalties. Deadlines are crucial, and eligibility is tight. To investigate these alternatives, you must immediately consult with a certified tax expert. Postponing action limits choices and heightens the risk of being held liable. For dinar holders, let us review the important points. A word about foreign currency gains: they're all taxable. Secondly, while skipping taxes is perfectly permissible, evading them is punishable by law. The third point is that proper reporting requires meticulous record keeping. Lastly, getting expert advice can help you save a lot of money and alleviate a lot of stress. Fifth, market dynamics and investment strategy could be impacted by impending Treasury updates. You may maximize your financial success while protecting yourself legally if you follow these guidelines. Keep away from any and all misleading information pertaining to dinar, such as assertions that profits are not taxed, that specific dealers are responsible for reporting, or that little amounts are secure. The Internal Revenue Service keeps a careful eye on all financial dealings, and following untrustworthy counsel may land you in hot water with the law. For financial safety, it is necessary to be informed of compliance requirements and to speak with professionals. Your entire investment is in jeopardy if you disregard our advice. You should keep in mind that time, strategy, and documentation can help you. It is possible to legitimately lower taxable income through strategic transactions, holding periods, and meticulous record keeping. You can legitimately use tactics like tax loss harvesting, installment sales, or spreading sales across numerous years. Seeking expert guidance guarantees the proper execution of these tactics. Penalties might be far more expensive than hiring a certified public accountant or tax attorney. Put your financial future in a safe place. Finally, dinar investors should brace themselves for a world of upheaval following this week's Treasury announcement. Be ready immediately. Ensure thorough documentation. Be sure to appropriately report any gains. Seek advice from experts and employ lawful tax methods. Refrain from believing internet rumors and stay away from disinformation. Making sure your compliance safeguards your bottom line. Remaining well-informed, maintaining compliance, and exercising prudence will help you legally minimize your taxes and avoid costly fines. If you follow the regulations, investing in Iraqi dinar can be rewarding. Take this as a guide to ensure the safety, legality, and security of your winnings. It is not a warning you should disregard.